Diving into SMT Divergence, you will often realize why the low you've been waiting for will never get swept, or the high you've been waiting for will never get swept. And you will often realize that price keeps pumping without a low being swept. SMT Divergence is when we have two correlated pairs that move very alike. So we're talking NAS and ES, EU and GU, AU and NZ, and so on. So for SMT Divergence, for continuations, we could utilize this model here. So we have Euro USD and GBP USD. So two correlated pairs that move very alike. Now, on Euro USD, what are we getting? We're getting higher highs, higher lows, higher highs, higher lows. So just bullish price action. We can assume Euro USD is bullish and it will be reaching higher prices. Now for GU, we're getting a higher high, higher low, higher high, then we'll get a lower low. Right? So here is where a lot of people get tricked out. Now they're assuming this is a break of structure, or a change of character, or a market structure shift. And this is why they're taking losses here. And if you've been realizing you've been taking a lot of losses here, right, you can now start implementing, looking at other pairs, right, that are correlated. So here, instead of seeing this as a bearish break of structure or change of character, we can now put it as a bullish SMT divergence, right? So Euro USD at this time, right? So again, time is pretty important. The lows should be similar times, right? There could be, the lows should be roughly the same time. So USD's low here should also be, so if this is at 6:45 a.m., this should also be at 6:45 a.m. All right. So this low here doesn't get swept, whereas this one does. All right. If your order flow is truly bullish, you can see this as a liquidity sweep. So you can either trade this pair here, see as a liquidity sweep, or you could trade this pair here and assume this pair is stronger because we didn't get the close below, or we didn't get the sweep below. So personal preference, right? For me, I'll just trade whichever gives me the entry model, right? Or whichever looks clean on the higher time frame, right? For reversals and extra confluence for your entries, you always want price to be reacting from a higher time frame POI. So we're talking your order blocks, your fair value gap, breaker blocks, supply and demand zones if you trade that, whatever. Here we can see on Euro USD, we're getting lower low, lower high, lower low, then we get our change of character or break of structure, mark structure shift, whatever, right? Now we're getting bullish order flow. Higher highs, lower highs, higher highs, lower highs, right? We also got this sweep here. Alright, so we've got the stop points here. So liquidation. Good. Now on GU, what are we getting? Lower lows, then we get our change of character, get our higher high, lower high, higher high, and lower high. Right? So if you were just looking at GU, you probably wanted one of these lows to get swept. Right? So your trade idea, your model, if you needed liquidity sweep, right, or if you needed extra confluence to take longs, you most likely didn't get entry here. That's fine though. Now you can start looking at Euro. So when one pair is doing something and the other pair isn't, that is SMT divergence. So if this low is getting ran, but the same low in GU is not getting ran, that is your SMT divergence. Alright? So let's look at this in a real life chart example. In order for you guys to pull up two charts at the same time, there's two ways. Whichever one you guys prefer, go with that one. One is go to this little plus icon and then search your correlated pair. So right now we've got GU. Now we're going to go with Euro USD. Right. Usually best when you got the same broker too. Right. Now we have this here. Right. So all these same time, similar price action. Right. That's one way. Make sure sometimes you guys might have a line instead of candles. So just double click on it and just make it, you know, whatever you guys want it. I'll go with candles. You guys can go with lines, whatever. So that's one way. Second way is going here and just opening another chart. So we've got GU to the left and we're going to put EU to the right. right? So now, and make sure you guys are on the same time frame too. For the previous method, the time frame would be the same, right? You don't have to change anything. For this one, you do have to go manually and change it. Alright, here we have on euro to my left, we have this high right here that never gets swept. Alright, never gets ran through. The same high, right, same time, on GU does get swept. So, while you're waiting for this high to get swept on euro, right, you're waiting, and then price never gives you that sweep. And then you change your bias. You wait, you wait, right? You wait, you wait. On euro, you're waiting for this high to get swept. It never gets swept, so you never get a trade. Or you still think of that as a drawn liquidity. You're taking longs to that high, and it never reaches there, and you take losses. GU though, the high gets ran, then we see bearish order flow no longer holding. Then you see bearish order flow in play, right? So right here is your SMT divergence. So you got this here, right? And then you could have it just like that. So that's your SMT divergence right there. So one pair took the high, but one pair didn't. And if they're both correlated, they should both move the same way. So that enough with extra confluence, right? Maybe we're reacting off a fair value gap or an order block, or whatever. This can act as a very strong tool, right? So here you can have this order block overlapping with the fair value gap, have your stop loss above the high, and then target what? Maybe this low 2R. While you're catching this trade here on EU, people that are waiting for the high to get swept never really get a trade. And the same thing happens when you're bullish too, right? So say here you're in a long, right, on euro. If you're in a long and you're waiting for this to be your profit target, this high up here, which never gets ran, you'll most likely get a loss or a break even. However, if you now match this with your correlated pair, right? So now GU takes a high, all right? Is GU's bearish order flow coming to play? Yes, it is. Now let me take partials to save my ass, right? It's very simple when you start thinking like that, right? Again, for trading, it's very easy to make money, but it's hard to keep money, right? And that comes from risk management. Once you can know when to exit, very easy, right? Partial there, might make some profit there, maybe a loss, right? But if you're just holding to highs and highs and highs, you're never really going to be making money, right? So this can not only work for entries, but also for exits. Here we have is another example. To the left, Euro USD, to the right, GU. This high on Euro never got swept. So if you're in longs, all right, again, market is fractal, so think of this in a high time frame or low time frame. Say you're in a long and your TP was up there, right? Or you're looking for shorts, but you're waiting for this high to get swept. This high, right, is the same high printed here. Now, on GU, we got the high. That sweeps. Now, bullish order flow no longer holds, and now we're getting bearish order flow. Alright, so just that alone, now you could reduce your losses, increase your profits, right? Just knowing what one pair is doing and what the other pair is doing, right? So now you can also use this for entries and exits, right? As I spoke about earlier. Entries, again, that will be your reversals or your continuation models that we spoke about earlier in the video. Now, for your bias, let's get into your bias, how we can actually utilize this on a higher time frame, how we can actually implement this to our system. Now, on a higher time frame level, it's still the same thing, right? So you could use your SMT divergence for mitigation of PDRAs, so your fair value gaps, your order blocks, liquidity, right? Higher time frame fair value gaps is lower time frame liquidity, right? Keep that in mind too. Here on my left, on NZD USD, we have this daily fair value gap right here that gets mitigated, gets tapped into, and pushes price lower. On AU, which is a correlated pair, to my right, we have the same daily fair value gap here. One asset taps it, and we see bearish movement. One pair doesn't. Now, let's look at this on a lower time frame. Let's say 1 hour. Let's get rid of this blocks. let's get rid of this box. Now, this can be our SMT divergence right here. Now, same thing happening on AU. Let's go on the 1 hour. The same high, right? Same time, same high, but the high never gets ran. The daily fair value gap never gets tapped. When NZD's highs gets ran, and now you're seeing bearish order flow, which also your daily fair value gap up here. On AU, when you're seeing bearish order flow come out of nowhere, right? It's best to look at the other pair that's correlated. Was there reasoning for this to happen? Alright? If there was, now you can have a system in place, right? If this happens, I'll go break even because I know it's not in my favor. Alright? Now you're making your own system. Alright? Here, and the thing is, I was actually in a lot of longs here. And the thing is, I was actually in AU longs, right? I was in AU longs, and I got a -1 because I didn't look at NZD USD, right? We were getting bearish order flow out of nowhere. I was a bit confused, and I didn't even think about to look at NZD USD until I realized on NZD USD we had a daily fair value gap mitigation. So if you can slowly implement this to your system, right? Understanding, you know, how you can actually utilize this and actually put in a system that actually makes you profit over a long period of time, you're doing a really good favor, right? Because again, sometimes you might get a false positive, right? This could just be a pullback, whatever, right? But now, you know, if your stop loss is all the way down there, now you could trail your stop loss closer and closer, right? Instead of taking a -1, you can take a -0.5. Instead of taking a 0.5, you can take a break even. When price comes below, your trade idea is no longer valid, so therefore your loss is a loss, right? Does that make sense? So you could, again, utilize this, right? You could use this as your bias, right? So this could be your bias. You could also use it as your confluence, entry, whatever, right? But just collect some data on it, how it moves, this and that. Be creative with it, but that's about it, all right? It's a very